Lecture 2. Leasing commercial or industrial shops. Profits that resulted from renting commercial or industrial shops are taxable, whether the rental includes all or part of its physical elements or intangible assets such as furniture, machines, tools, and equipment, or intangible elements or intangible assets such as trademarks or goodwill. The taxable profit can be calculated as follows. Actual rental value during the year minus actual costs and expenses. An individual taxpayer rented a commercial store equipped with fixtures and shelves during the year 2018 for 8,000 livres Egyptian monthly. The actual costs and expenses that related to the rental amounted to 1,500 livres Egyptian monthly required give the tax treatment of the taxpayer for year 2018. Answer. Profits resulting from renting commercial or industrial shops are taxable as revenues of commercial and industrial activity. The taxable profit can be calculated as follows. Revenue of the year 8,000 livres Egyptian times 12 months amounted to 96,000 livres Egyptian. Less costs and expenses related to lease 1,500 livres Egyptian times 12 months amounted to 18,000. 18,000 subtracted from 96,000, then the taxable profit netted 78,000 livres Egyptian. Now calculate the tax due on revenue of commercial and industrial activity. The first bracket of 8,000 livres Egyptian exempted, and then accumulated tax credit is not applicable. The second bracket, its maximum limit is 22,000 livres Egyptian and subject at 10%. Then the tax due on second bracket amounted to 2,200. The third bracket, its maximum limit is 15,000 and subject at 15%. Then the tax due on the third bracket amounted to 2,250. The fourth bracket, 33,000. The remainder, subject at 20%. Then the tax due on the fourth bracket amounted to 33,000 times 20% equals 6,600. Now we can calculate the accumulated tax credit as follows. Tax due on second bracket plus tax due on third bracket plus tax due on fourth bracket all times 7.5% amounted to 828.75 livres Egyptian. Then the tax due equals tax due on second bracket plus tax due on third bracket plus tax due on fourth bracket minus the accumulated tax credit. The re-evaluation of net assets of the enterprise that resulted in profits or gains as converting the enterprise into a corporation is not taxable because of the encouragement of establishing and expanding corporations. The tax shall not apply to profit from the re-evaluation of the assets of a sole proprietorship when providing this as an in-kind share to the capital of a joint stock company, providing that the shares corresponding to the in-kind share are nominal and shall not be disposed within 5 years. This provision is put in to encourage the establishment and expanding of real corporations. Tax on long-term contract. A long-term contract means a manufacturing, preparation, or construction contract, or performance of associated services thereof, carried out by an establishment for third parties based on a fixed value, and the implementation or execution shall take more than one tax period. The tax treatment of long-term contracts is as follows. Number 1. The percentage of completion is determined on the basis of the actual cost of the executed work until the end of the tax period divided by the total estimated contract cost, taking into consideration that such percentage must be recalculated whenever there is a change in such cost. Number 2. The total estimated profit is determined on the basis of the difference between the contract value and cost estimated thereto, taking into consideration the recalculation of the total estimated profit if the value of the contract changed. Number 3. The estimated profit of a contract through every tax period is determined on the basis of the total estimated profit of the contract as a whole multiplied by the percentage of completion as determined in clause 1. Number 4. At the end of the contract, the net actual profit or loss is determined on the basis of the actual cost subtracted from the actual revenue for the entire contract. If the computation of a contract in a tax period in which the contract has been implemented shows a loss, the loss is deducted from the profit of the current period first. If the profit is not enough, the balance or the remainder of the loss is deducted from the preceding tax period for the execution of the contract and in a way that does not exceed the profit estimated and declared during the preceding tax period for each contract separately. Number 6. Tax shall be recalculated on such basis and the taxpayer will be reimbursed with any amount that was paid in excess of such tax. If the loss incurred from the execution of a contract exceeds the profit estimated for a tax period or tax period preceding the contract, the remaining loss will, in applying the provision of Article number 29 of this law, be carried over to the following year for up to maximum 5 years. Example 1 on page 170 on your textbook. An individual contractor had a single long-term construction contract lasted 3 years that began on January 1st, 2015 and ended on December 31, 2017. The contract value amounted to 5,100,000 livres Egyptian and its estimated total cost amounted to 4,500,000 livres Egyptian. The actual cost of each year of execution amounted to 1,500,000 livres Egyptian. Required, determine the taxable profit for each year of the years of execution. The answer. The total profit of the contract equals value of contract minus total estimated cost of the contract amounted to 5,100,000 livres Egyptian minus 4,500,000 netted 600,000 livres Egyptian. To determine taxable profit for each year of years of execution. Now we calculate the completion percentage for each year. Completion percentage of each year equals actual cost of the year divided by total estimated cost. Taxable profit of the year equals total profit of the contract times completion percentage for the year. Now we have 3 years of execution, year 2015, year 2016, year 2017. Actual cost per year given 1,500,000 for year 2015 and for year 2016 and for year 2017. Total estimated cost fixed or not changed during the execution of the contract, 4,500,000. Now the completion percentage for each year amounted to 1,500,000 divided by 4,500,000 amounted to 33.33%. Then the taxable profit for each year can be calculated as follows. Total estimated profit of the contract times completion percentage. 600,000 livre Egyptian times 33.33% amounted to 200,000 taxable profit for each year of years of execution. Example 2 on page 171. From example 1, assume that at the end of contract, the actual profit amounted to 670,000 livres Egyptian. Increased because the client agreed to pay 5,170,000 livres Egyptian instead of 5,100,000 for the value of the contract. Required number 1, give the tax treatment at the end of contract to compute the tax due for year 20 and 17. Answer. The additional profit equals 5,170,000 livres Egyptian minus 5,100,000, netted 70,000 livres Egyptian. Because there is no change in contract cost, the taxable profit for the year 20 and 17, the third year or the final year, can be calculated as follows. 200,000 livres Egyptian plus the additional profit of 70,000, total 270,000 livres Egyptian. To calculate tax due for the final year or year 20 and 17. The first bracket, 8,000, exempted. The second bracket, 22,000, subject at 10%. Then the tax due on second bracket amounted to 2,200 livres Egyptian. The third bracket, 15,000, subject at 15%. The tax due on third bracket amounted to 2,250. The fourth bracket, 155,000, its maximum limit, subject at 20%. Then the tax due on fourth bracket amounted to 155,000 times 20%, amounted to 31,000 livres Egyptian. The fifth bracket, the remainder, 70,000, subject at 22.5%. Then the tax due on fifth bracket amounted to 15,750. Note, the accumulated tax credit cannot be calculated because the taxpayer here reaches to the fifth bracket. The tax due equals tax due on second bracket plus tax due on third bracket plus tax due on fourth bracket plus tax due on fifth bracket, all total 51,200 livres Egyptian. An important note. Note, if the individual contractor have more than one long-term contract for the taxable year, he enjoys of one general exemption for the year on one contract amounted to 8,000 livres Egyptian. Example 3 on page 172 on your textbook. From example 1, assume that at the end of contract, the actual profit amounted to 400,000 livres Egyptian because some specifications of the contract were not met. Required, give the tax treatment at the end of contract. The taxable loss equals 600,000 livres Egyptian. The net profit that estimated early minus 400,000, netted 200,000. Then the taxable profit for year 20 and 17 equals 200,000 that estimated early minus 200,000, netted 0. Then no tax is due for year 20 and 17. The tax shall not apply to profit from the re-evaluation of the assets of a sole proprietorship when providing this as an in-kind share to the capital of a joint stock company, providing that the shares corresponding to the in-kind share are nominal and shall not be disposed within 5 years. This provision is put in to encourage the establishment and expanding of real corporations. At the end of the first year of the contract, the cost of execution was increased by 400,000 livres Egyptian. At the end of the second year, the value of the contract increased by 10% because of some additional specifications required by the client, and therefore the total cost of the contract increased to 3,306,000 livres Egyptian. Required determines the taxable profit of each year of years of executing the contract. Answer. Number 1. To determine estimated profit of the contract in each year. 3 years of execution were year 2016, 2017, and 2018. The value of contract for 2016 was 4 million. For 2017 was 4,400,000. For year 2018, 4,400,000. No change between year 17 and year 18. Minus estimated cost. Estimated cost in year 2016 was 3,200,000. Then the estimated profit amounted to 800,000. For year 2017, the value of the contract 4,400,000 minus the increased estimated cost to be 3,306,000. Then the estimated profit 1,040,000. For year 2018, value of the contract 4,400,000 minus the estimated cost, that remains 3,306,000. Then the estimated profit calculated in year 2018 1,040,000 livres Egyptian. Step number 2, to determine taxable profit of each year. For the first year, year 2016, completion percentage equals actual cost divided by total estimated cost. 800,000 livres Egyptian divided by 3,200,000. Then the completion percentage amounted to 25%. Taxable profit. Estimated profit of the contract times completion percentage. 800,000 livres Egyptian times 25% amounted to 200,000 livres Egyptian. Then the taxable profit for year 2016 calculated to be 200,000 livres Egyptian. For year 2017, completion percentage is calculated as actual cost of the year divided by total estimated cost. 1,680,000 livres Egyptian divided by 3,306,000 amounted to 50%. The taxable profit of the year equals estimated profit of the contract times completion percentage. 1,040,000 livres Egyptian times 50% amounted to 520,000 livres Egyptian. For year 2018, completion percentage equals actual cost during the year divided by total estimated cost. 840,000 livres Egyptian divided by 306,000 amounted to 25%. Then the taxable profit of the year equals estimated profit of the contract times completion percentage. 1,040,000 livres Egyptian times 25% amounted to 206,000 livres Egyptian. Example number 5 on page 174 on your textbook. This example says an individual contractor had a single long-term construction contract lasted 3 years that began on January 1st, 2015 and ended on December 31, 2017. The contract value amounted to 8,100,000 livres Egyptian, and its estimated total cost amounted to 6 million livres Egyptian. The actual cost of each year of execution amounted to 2 million, 3 million, 1,500,000 livres Egyptian, respectively. Required: number 1, determine the taxable profit for each year of the years of execution. Number 2, to adjust the taxable profit according to the following two cases. Case number 1. The actual profit of the contract is 2,300,000 livres Egyptian. Case number 2. The actual profit of the contract is 1,670,000 livres Egyptian. Number 6. Tax shall be recalculated on such basis, and the taxpayer will be reimbursed with any amount that was paid in excess of such tax. If the loss incurred from the execution of a contract exceeds the profit estimated for a tax period or tax periods preceding the contract, the remaining loss will, in applying the provision of Article number 29 of this law, be carried over to the following years for up to maximum 5 years. Note: in the case in which the actual cost differs from the estimated cost, percentage of completion of the ending year is not calculated. Now, we have 3 years of execution, year 2015, 2016, and 2017. Actual cost for each year given: 2 million, 3 million, 1,500,000. Then the total cost total 6,500,000. Total estimated cost. In year 2015, 6 million. In year 2016, 6 million. In year 2017, 6 million. Then the completion percentage for year 15, 2 million divided by 6 million, 33.33%. Then the taxable profit for year 2015 equals 2,100,000 times 33.33%, amounted to 700,000 livres Egyptian. For year 2016, the completion percentage equals actual cost 3 million divided by total estimated cost of 6 million, amounted to 50%. Then the taxable profit for year 2016 equals 2,100,000 livres Egyptian times 50%, amounted to 1,050,000. For year 2017, we can not calculate the completion percentage. Then the taxable profit can be deduced for this third year as follows: the total profit of the contract 2,100,000 minus profit of year 15 700,000 minus profit of year 16 1,050,000, netted 350,000 livres Egyptian. Required to: the adjustment of the taxable profit. Case number A. If the actual profit of the contract is 2,300,000 livres Egyptian instead of 2,100,000, the additional taxable profit equals 2,300,000 livres Egyptian minus 2,100,000 netted 200,000 livres Egyptian. Then the taxable profit of the final year or year 2017 equals 350,000 plus 200,000, total 550,000. Case number B. If the actual profit of the contract is 1,675,000 livres Egyptian instead of 2,100,000, then the taxable loss equals 2,100,000 minus 1,050,000 675,000 netted 425,000 livres Egyptian. For year 2017, the last year or the third year of execution, the taxable profit or the adjusted taxable profit equals 350,000 minus 350,000 of the total loss, netted 0. Then the remainder of loss can be shifted backward to year 2016. The excess of taxable losses that carried backward to be deducted from the calculated profit of year 2016. For year 2016, the adjusted taxable profit equals 1,050,000 livres Egyptian minus the excess of loss, 425,000 minus 350, netted 970,000 livres Egyptian. Note: the taxable losses of long-term contracts that determined as the ending year of execution are shifted backward to be deducted from estimated taxable profits of the preceding years. The remainder of the loss, if any, is then shifted forward to be deducted from the same activity revenue, commercial and industrial activity, up to maximum of 5 years, according to Article number 29 of Law number 91 of year 2005 and its amendments.